Hey folks, welcome back. Now let us look at the question from the September-December 2020 exams, and let us look at the requirement first. As you can see the requirement over here, prepare a schedule uh, of adjustments required to the retained earnings of Loden Company at the 30th September 2008 as a result of the information in Note 1 to 4. And we have to prepare the statement of financial position of Loden Company as of 30th September 2008. And as you can see, we have trial balance in front of us, 20 shares of $1 each, retained earnings. Then we have office building at cost, factory cost, office building accumulated depreciation, factories accumulated depreciation, environmental provision, current liabilities, current assets, proceeds of 5% loan note, deferred tax, and interest paid. Right. So related to note one, we have, as you can see, I have highlighted one thing: proceeds of 5% loan note 5,000, and the interest paid 250,000. Okay. Now let us go back to the first adjustment. 5% loan note was issued on 1st October X5 as a face value of 5 million. Direct cost of the issue amounted to 0.125 million, that is 125,000, and were charged to profit or loss. The loan will be redeemed in 5 years. Time at a substantial premium, which gives an effective interest rate of 8%. The annual repayment is 250,000. 5 million into 5% are paid on 30th September each year. Now dive in on Excel sheet. What will be our opening value? Opening amount will be 5 million. 4,875,000. Okay. Now, as we already looked at, the finance cost of the loan note, the effective interest rate is 8%, right? The effective interest rate was 8%. Let us note somewhere. Effective interest rate 8%. Okay. And applied to the carrying amount of the loan is, what is the carrying amount? The carrying amount is 390,000. Okay. The actual interest paid is 250,000, which you can see in trial balance as well, which leaves a closing carrying amount. What will be the closing carrying amount? 501500 for inclusion, as it will be included as non-current liability in the statement of financial position. Now you might be wondering that how it will happen. So let me explain you. Opening balance 1st October X7, finance cost 8%, opening balance, interest paid 5%, principal, closing balance 30th September X8. Simply, I'm just linking the opening balance. Okay. Now, my interest cost. What will be my interest cost is equal to 4,875,000 multiplier by how much is the interest cost? It's 0.8%. That will be 0.08. 390,000 I got, right? And my principal, the interest, effective interest will be the same. That will be 250,000 all time. So what will be the closing balance? Is equal to sum this plus this, oh sorry, this plus this, sorry, minus this. How much I'll get? 5515. 4875. Just a second. How much I'm getting? All right. Sorry, that was an formula error. So closing balance will be 5015,000. So far, so good. I hope you get it till here. Now, let us move for the next working two. Okay, and what is the working two? Let us move to the question and look at it. Loudon Company acquired an office building on 20 million on 1st October 2000 X2. Okay, Loudon acquired an office building for 20 million on 1st October 2002 with an estimated useful life of 25 years. Okay. The depreciation is charged on pro rata basis. On 1st April 2008, the building was deemed to be impaired as its fair value was estimated to be 12 million. At the date, the estimated remaining life was revised to 12 years. Ignore the deferred tax consequences of this revaluation. The Loudon Company had 10 factories on 1st October 2007. Loudon Company sold one accumulated 2 million for 3.5 million. The proceeds were credited to the suspense trial. Factories cost 1st October 2007, note 2, which is 40 building 20,000. Suspense account 500 and related to note 2 in the trial balance. If you can notice, no. So what we need to do now? Excel sheet again. Now, working to related to non-current assets, and firstly, we'll be looking at office buildings. Carrying amount 2000 X7, sorry, 1st September 2000 X7 is how much? Is equal to, I'll be working in thousands. Okay, so is equal to sum 20,000 minus 4,000. The accumulated depreciation we noticed. Oh, come on. 20,000. Now 16,000. Okay, depreciation. Now what will be the depreciation? Depreciation to 1st April exit is equal to some 20,000 divided by 25 years life. Okay, multiply by 6 months out of 12 months, and we will get 400. And mind you, we have to deduct, right? So minus in front of it, and we will get the carrying amount is equal to, I'll get also is equal to sum this and this. 15,600. Okay, that's our carrying amount at 1st April exit. Carrying amount 1st April exit 15,600. Okay, now the impairment. Impairment is given already in the question, which is we don't need to calculate it, just punch it 3,600. Right now, fair exit, we will get this and this 12,000. Finally, it is first it is a fair value at 1st April exit. Now, working done, another working done. Now. We have depreciation to 30th September exit. Okay, to 30th September exit, and what it will be? Obviously, is equal to 12,000 is the carrying amount. The overall life is 12 years. Multiply by, now we have to do it for another 6 months. Okay, so 6 divided by 12. What we'll get? 500. And yeah, as it is a depreciation and it is expense, minus 5. Finally, at the year end, what will be the carrying amount finally of the office building is equal to sum 12,000 minus 500, 11,005. Wow. Office buildings done. Now related to factories, which we already looked at. Carrying amount at September 2007, 40,000 minus 11,100, 28,900. Amount 3,000. Okay. Carrying amount at 1st September 2008 is equal to sum this, sorry, is equal to sum this minus this. We get 25,900. Finally, what we have to do, depreciation for the year to 30th is equal to sum, oh sorry, it's minus sum, okay, is equal to minus sum 25,900, 25,900 multiplied by depreciation rate is 0.15%, 3,885, and it's equal to sum There 22015. Finally, disposal of factory. Disposal of factory. Disposal proceeds 500. Carrying amount is 3,000, which we sold it. So we will get our gain on disposal is equal to sum. Just drag it down. 500 is the gain on disposal. All done. Okay. Let's move back to the question. Working three. Load company has an obligation to clean up environmental damage caused at one of its factory sites during 2007. The cleanup is due to take place at the end of the factory useful life. The limited, the liability has been accounted for appropriately, and the balance 1st October 2007 presents the correct present value at the date. Company has a cost of capital of percent. Okay. And, and and the credit side 50. So first, what we will do. So first, what we will do. Move to the another working area, and it's first the tax written down value of PPE at 30th September 2008. We have 25,000. Carrying amount of property, plant and equipment at 30th September 2008 as per SOFP. Okay, what is that? 33,515 negative 33,515 is equal to will get 8515 8515. Okay, 8515. We are done till here. Now deferred tax provision required at 30th September 2008. It's 8515 multiplied by 20%, 1703. Deferred tax provision at 30th September 2007 as per the trial balance 1500. All done. Oh, just a second, sorry. It is equal to sum 203. So deferred tax charge for the year ended 30th September 2008. All workings done, folks. All workings done now. And what we will do, simply move up. Uh, all working done. Now we have to make the statement of financial position and return earnings schedule. So here it is. Schedule of adjusted retained earnings of Loden Company as at 30th September 2008. Retained earnings per trial balance. Okay. Now 4122. Now the adjustments. Firstly, add back issue cost of loan is 120. It was 125,000. I'm writing it as 125. Hope you don't mind. Now loan cost, loan finance cost. That's our working one, right? And what I will do, simply I will type is equal to here. I will move up to my working one. Okay, I did work over here in thousands now. So let me just type it. It's 390. Now, building depreciation. That was our working too. And it's 900. It was 390. Now, impairment working to 3600. Factory depreciation working to minus 3885. Okay. Gain on disposal factory working to what we will get 500. What was that? And then unwinding of discount on environmental provision. Okay, that this is something which we have not done in working, so I'm doing it over here. It was 1228. Okay, it was 122, and the provision was at 5%, so 0.05. 61.4 or 61. Lastly, defer tax adjustment, that's working 3 and 203 is equal to sum. What we will get, let's see. One more down. Boom. 4169.6 is my answer. Right. That is my adjusted retained earning. 4122, 125 minus 390 minus 900 minus 3600 minus 3885 561.4. Okay, that's in negative. Okay, that's in negative 4 and 203. Now we'll get adjusting retained earning, which is 4292.4, and that's the answer of this requirement. I hope you get it. See you soon. Now, lastly, for this part of the question, we have to do statement of financial position as at 30th September 2008. Here are the assets, non-current assets, property, plant, and equipment. As per our working group, was 33,515. Current assets, as per the trial balance, 14,700. We will get total assets, sum 48,215. Okay, bang on for equity and liabilities. Equity, shares $1 each according to the TB, 10,000. Retain earning according to the part A, yeah, is, I will take it as 4292. Okay, and we will get is equal to sum. How much is that? We will get 5708. Non-current liabilities now. %5 loan note, working one. That was, you can link it as well, 5015. Environmental provision, part A. How much was it? 1289. Deferred tax, working 3, 1703. What's remaining? Nothing over here. So is equal to some 8,007. Current liabilities, trial balance 34,500. And overall, it will be is equal to sum 5708 plus, or not equals to plus, once, no, sorry, this plus and 34,500. what we will get. 48,215, and we got total equity and liabilities. That's it. We are done with the question. I hope you get it, how to draft this part of the answer question, and bang on.